Sorry, guys, the previous meeting got abruptly end because of the Wi-Fi issue. So let's continue. So now, from the examination point of view, you have to take care of two things. One, you have to mention whether the GST is output or input. And second, you have to mention what type of GST it is. IGST, CGST, SGST, UTGST. That is what you will take care of. Now, in this transaction, do you have any problem? Please tell me. Online people, do you have any problem here?
No, sir.
Now, what is going to be my second entry in the books of the manufacturer? So the day the manufacturer is going to pay this to the government, the GST, that will pass the payment entry. So what is the payment entry here? 12% output IGST account debit. I'm closing the liability. To increase liability, credit. To decrease liability, debit. To bank, 14,400. Any problem? So now, in future, the manufacturer has to pay this money to whom? Government. That is GST department. How much money paid? 14,400. GST remitted by manufacturer or paid by manufacturer. Who paid the GST here? As of now, retailer paid, because for manufacturer, retailer is a customer. So he paid the GST. And who's the remitter of the GST? GST remitted by manufacturer. And GST paid by whom? GST paid by retailer. Now, this money, what the retailer paid, he will require from the end customer in the future. Any problem here? So, who is the payer of GST in this transaction? Who is the payer of GST in this transaction? Retailer. Who is the remitter of
Retailer.
GST in this transaction? Manufacturer. Any problem here? Online people, any problem here?
No, sir.
Wonderful. Now,
No.
now, please tell me the entry in the books of retailer. For retailer, what is this transaction? Purchase transaction. It's a business financial transaction. What transaction? Cash purchase transaction. Please tell me the journal entry for cash purchase. Sir, purchase account debit. What is the purchase value? Sir, whatever was the selling value of the seller, that is the purchase value of the buyer. Correct? No? What income he showed, that same amount I show as my expense. So what income that the opposite person showed? 120 was the income. So what is my 120 here? Purchase cost expense. Any problem? So seller's selling value is the buyer's buying value, purchase value. So 1,20,000 I'm recording. Any problem? And to bank, money is going out. To bank. This is a cash transaction. You have to pay money. How much money you have to pay, boss? 1,34,400. So now we can go to ledger, sir. We can't go to ledger. Why? Sir, in debit, one item will come. How much it is? 14,400. This looks like GST, sir. What GST? IGST. IGST. So here, IGST account debit. My question goes to all of you. What is the nature and classification of this IGST? Income, expense, gain, loss, asset, liability. What is it? Think and tell me. What is the classification? Here you said liability. Correct? No. Output IGST, you said liability. Why? Because this money is coming in with the intention to go out. So it is liability. What is this? Same liability means say yes, liability, sir. Or something else. Classification is what? Asset, liability, capital, revenue, expense, loss. Expense, liability, asset, expense, asset, 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 asset. Why asset? Super, super, fantastic. Expense, 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 asset, asset, asset. Wonderful. Those who said expense, where is it? Kuchi. How is this expense? Tax is your expense. Sir, just because you debited, debit all expense and losses. This is asset. I'm telling you, I'm shouting and telling. This money which the retailer paid, he will recover from customer. Anything that I get in future, anything that I get in future is asset. And madam, he gave a brilliant answer. What did he say? So this money I'll recover in future. He gave explanation also. Still, you said asset. This is expenses. Your eyes means this. No, sorry, the eyes should be wide open, and here should be what? Wide open. Wide open. All is gone. Govinda. Oh, Govinda. This is asset. Madam, how will it be liability? Liability will not come in debit. No. Liability creation will come in credit. So this is not liability. This is asset. Why this is asset? Because this money what the retailer is paying from retailer's bank account, how much money is gone out? 1,34,400. In that 120 is towards the goods that he purchased. Extra 14,400 is paying. No, boss. Is he liable to pay this money? No. GST is what? Ultimately, the amount to be paid by the end customer. But we don't know who's the end customer. When I'm selling the goods to retailer, does the retailer know who's the end customer? No. So he will temporarily pay now. Later he'll recover from whom? End customer. So anything that I get in future, anything that I get in future is my asset. And to create asset, what am I supposed to do? Debit. So this is my asset. And I have to give a different name to it. No? For liability, GST you gave as output IGST. Now this is input. So the money which is going out now, in future will come in. So it is called as input IGST account. So 12% input IGST account. So input and output, the word, don't look at the present what is happening. You have to think input and output from future point of view. Now, why do I call this as output? The money is coming in, no. Here, bank money is coming in. So don't see present, see the future. This money which is coming in future has to be, sorry, this money which is coming in now has to be paid out in future. So we are naming the future, keeping future in mind. We're naming keeping the future in mind. So now this money which is coming inside, in future it will go out. In future it will go out. So it is output GST. This money which the banker is, sorry, the retailer is paying now through the bank. This money which the retailer is paying the money now, the money is going out. But in future what will happen? I'll get this money in from whom? Customer. So in future the money is coming in. So it is what GST? Input IGST. So input IGST is related to purchase or sale? Purchase. Output, sales. Input, purchase. Output, sales. Any problem? Those who still have the difficulty in remembering, those who have the habit of mugging up. Input is relation to purchase. Output is with relation to sales. IP. IP paper is there in CBSE. IP. Correct? No. OS. Outstanding. OS. Outstanding. Output is for sales. Input is for purchase. Donkey fellow, will you remember like this? Will you remember like this? No. This is one way of remembering, I agree. But don't be like this. Donkey fellow you are then. Now tell me, in this journal entry, do you have any problem? Purchase is what? Expense. To increase expense, debit. Input IGST is what? Asset. To increase asset, debit. Bank is what? Asset. But here money is going out. Money is going out. To decrease credit, done. Any problem here? Online people, any problem here?
No, sir.
No response?
No, sir.
No, sir.
Only 3 people responded so far. 4 people. Online. Others sleeping, eh? Bhuvan says, sir, can you please explain why output? Your voice is breaking. Oh my God. Now Bhuvan is clear or still confusion is there? Bhuvan?
Sir, your Wi-Fi is lagging, sir. Video and audio is not matching.
Not matching. No, because I've connected my phone Wi-Fi. There's a problem in the academy Wi-Fi. Is the light on there? Is it blue? Just a second. I'm pausing the video. 1 second, people. Yes, people. So let's continue now. So are you clear with the journal entry? Are you clear with the journal entry of or in the books of retailer? Clear now? Okay. Now, can I continue? Okay. Now, for retailer, what is the cost price? 120 is the cost price. Now, this 14,400 is now not the cost price because it is the money that I'm going to receive in future. Anything that I'm going to receive in future is not my expenditure, not my cost. So this will be asset. So technically speaking, the cost for this particular person, retailer, is now how much? 120. 120 is the cost price. So same dialogue between these two people. Cost price plus profit is equal to selling price. Selling price is also called as invoice price plus GST is equal to the tax invoice price. Please tell me what is the cost price for the retailer now? 120 or 1,34,400? 120 is the cost price. Wi-Fi has come now? Where? 4G will not work properly. 5G. Okay. Chalo. Okay. Now it's connected. Let's see. But still, you check with him what is the problem. Now, plus profit. Now, the profit margin of the retailer is agreed is 18,000 rupees. The profit that he has agreed is 18,000. So, plus 18,000. So, please tell me now what is the selling price of the retailer? 1,38,000. 1,38,000. Now, plus GST, how much percentage? Same 12%, because once rate is applied for one product, the same rate will apply till the end. So, what is the application? 12% on 138, 1,38,000. How much it is? 16,560. 16,560. Any problem here? Now, what is the tax invoice price? What is the tax invoice price? 154,560. 154,560. What happened? No problem. Okay. Now, we have to record the entry in books of retailer. I will not record the entry in the books of customer. Entry in the book of retailer. Please tell me, what is the entry here? This is the sale entry now, because retailer is now the seller. He's now the seller. Please tell me the journal entry. Same entry that we record for manufacturer. What entry? Sir, I'm selling the goods. So money is coming in the bank account. So bank account, debit. Bank account, debit. How much money is coming in? 1,54,560 is the money coming in. 1,54,560 the money is coming in. This money, what is coming in, is your entire income. Is this the entire income? No. In this, how much is your income? 1,38,000 rupees is your income. So to sale how much? To sale how much? 1,38,000. Extra money that is coming in is how much? 15,000, 16,560. The 16,560 that money is coming in now, no, is what money? Sir, it is GST money. This is the GST. This is the GST paid by the end customer to us. So end customer is paying you 1,54,560. In that, he has enjoyed the goods worth 1,38,000. An extra 16,560 is the tax that is paying from his pocket. So tax that is suffering from his pocket is 16,560. Any problem here? So this money which is coming in, is coming with the intention to go out, because this money, what the customer is paying to you, retailer cannot keep that money. Out of this 1,54,560, how much money can he keep to himself? Only 1,38,000, and remaining 16,560 he has to deposit. So can I say this money which is coming, originally it is coming with the intention to go out. Anything that has to go out in future is liability. To create liability, credit. So what is the name here? To output IGST account. Any problem? Any problem? So can I say this is liability here? I'm coming here. I'm not completed. Once again, this is liability. Now I know what is running in your mind. Sir, are you going to pay this entire 16,560 to government? Because you said this money I'll recover in future. Anything that I recover in future is asset, you said. No. Why did you recover? You are creating the entire liability, which means you're going to pay this entire money outside. So where is the money recovered? Is what your doubt should be. Yes or no? No? 12%. My imagination that Bharat is asking this doubt. And what is Bharat asking? 12%. So you didn't put 12%. Sir. Okay, but 12%. Okay, happy now. Now, others would have thought about this. No? Who thought like that? Then okay. Now for you, there's a next entry. Now this entry is called as set off entry. In the entire chapter, in this entire chapter, purchase entry, sale entry, no problem. Input, output, no problem. CGST, SGST, UTGST, IGST, no problem. Only problem is set off. Set off rule is very complicated. So is this there in my syllabus? Time will tell you. Now, Amma, time will tell you. You have to create suspense. No? Set off means what? Whatever money you're going to pay to government, you're not going to pay the entire money to government now. Now, set off means what? This is the entry that is being passed at the time of payment. Now, at the time of payment, I'm going to reverse my liability. What is the credit purchase entry? Purchase to creditor, to creditor. To creditor is a liability like that. To output IGST also liability. When we pay the creditor, what is the entry? Creditor to bank. So like that, when I reverse my output IGST, it should be output IGST to bank. So now, to create liability, I credited. To reverse liability, debit. So output 12%, no? 12% output IGST account debit 16,560. Now, will you pay this entire money? No, you'll not pay this entire money to government because in this 16,560 already the retailer is paid 14,400 to government in advance. So you will minus that 14,400 and pay balance to government. So in my hand, how much is there now? 16,560. In the 16,560, I'll count and take 14,400, put back in my pocket. How much is there in my hand? Remaining 2,000. Hey, 16,560 minus 14,400. How much? 2,160. This 2,160 is what I'm going to pay to the government. I'm going to pay the balance 2,160 to government. So now, to create asset debit, now when you have kept that money in your pocket, your money is recovered, no boss. Asset means what? Anything that I receive in future is asset. Already you got this money. In this 154,560, 16,560 is already come to your pocket. Correct? No, in this 16,560, that 14,400 is already there in that, no boss. So now, is this asset any longer required? This asset will remind me, collect money. Donkey fellow, you already collected the money in the bank. When? At the time of sale. You already collected. So that asset have to knock off against the liability. To create asset debit, to close asset credit. So now, 12%. Okay. 12% input IGST account. How much? 14,400. So liability of 16,560 is knocked off against the asset 14,400. Now balance money, how much will you pay to government? To bank. 2,160. This money goes to the government. Understood? So which means whatever money retailer paid 14,400 now stands recovered from the customer. Now my question goes to all of you. In this entire process, from manufacturer to retailer to the end customer, how much GST in total government collected? Think and respond. One more time, I'll ask my question. In this entire process of buying and selling, from manufacturer to retailer and from retailer to the end customer, in total, how much money did the government make here? 16,560 only. Now, in the first phase, government, how much money they got? Output IGST to bank money remitted to the government. How much? 14,400 money received by government in the first stage. In the second stage, how much money did the retailer pay? 2,160 in the second stage. So manufacturer remitted 14,400. Retailer remitted 2,160. I did not use the word paid. Because ultimately tax is paid by whom? End customer. Manufacturer and retailer did the job of postman. Manufacturer collected the money from the retailer and handed over the money to the government. Retailer in return took the money from the end customer and handed over the remaining money to the government. In total, how much money did the government make? 16,560. I said you GST is value added tax system. No? I told you I'll give you the explanation at the right time. Now the right time has come. GST is on the value added tax system. Listen to me very carefully. In this entire process, manufacturer, first stage, he charged a cost price of 1 lakh rupees. Do you agree with me? What is the value addition here? What is the value addition for the manufacturer? Profit of the manufacturer. When the goods came in the hand of retailer, what is the value addition done by the retailer? It's a profit margin of the retailer. So cost price plus profit. Profit is how much? 20,000. Both put together how much? 120. On this 120, 12% GST how much? Into 12% GST how much? 14,400. Plus GST is value added tax system. Means in every subsequent stage, you will not again charge the GST on this both. Whatever is the value addition in the subsequent stage, which is profit, on that only you will charge GST. So what is the value addition on this stage? 18,000 was the profit margin of the retailer. So 18,000 ka 12% is how much? 18,000 ka 12% how much? 2160. Is it matching or not matching? Yes or no? So 14,400 is the tax on the cost price and the profit. Always the first GST will be the high GST. Why? Because in the two aspects is there, cost price and profit. Whereas in the subsequent stages, that is retailer, dealer, wholesaler, they add their margin. No, on their margin only GST will come. On their margin only GST will come. Why? Because here what happened? Here we collected 16,560. The 16,560 already had this 14,400. Correct? No. How did you get the 16,560? 1 lakh cost price plus 20,000 profit of the manufacturer plus 18,000 profit of the retailer. How much put together? 1,38,000 into 12% is how much? 16,560. Will I pay this entire 16,560 to government? If I do so, what will happen? On this cost price, again you are calculating GST. On this profit, again you are calculating GST. GST, already 1 lakh is calculated here, Robust. When I gave this 14,400 to government, how did I get this 14,400? Sir, on this 1,20,000, I calculated 12%, correct? This 14,400, how did you calculate? So 120 ka 12%. 120, how did it come? Cost price plus profit. So on this 1 lakh and 20,000 profit of the manufacturer, GST is already paid, no boss. So one more time, if I calculate GST on these both, it will be wrong, no? So what we did, on 138,400, 12% GST, 16,560 we collected. Because this money we have to collect from the customer. But out of this, already tax on these both, which is 14,400, already paid to government in advance. So that we minus and pay balance 2,160 to government. So this is output. From there, I minus the input and pay balance 2,160 to government. So input, why it is given? Because if you don't take input, if you do not take input, what happened? Again and again on cost price and the profit, where the GST is already charged on that again and again you charge. Please tell me, again and again, if you keep on charging the GST, what will be the ultimate impact on the price of the product? It will increase. Imagine, had you not got input here, imagine from the retailer's point of view, retailer did not take this 14,400 as what? Cost. He did not add this in the purchase cost. He took it as asset because he knew that he'll collect his money separately. Imagine if input is not available, what will he do? He will charge 1,34,400 as cost price on that profit. So ultimately, what is going to be selling price now? If input is not available, what will be the cost price of the retailer? 1,34,400 plus profit margin 18,000. So what is my selling price? Use your calculator, not brain. I don't trust your brain. Calculator. 152, 400 plus GST. Plus GST. Do 12% on this. Calculator, not your brain. 1,50,000 to 400 into 12% each. 18? 280. Tell me the selling price final. Add these both. 2? Selling price totally. 150 to 400 plus 18 to 88. 170 to 88. Look at the difference in the price, boss. When input is not available to retailer, he will charge that tax from you only. Means already you are paying tax here. On top of that, the tax that the manufacturer charged, that also is included here. Sorry? 176.88. Okay. That is very important. No. Anyways. Are you able to follow? So here, when you paid 176.88, you paid GST twice. Once you paid the GST 114,400 plus 18,288. So on the same 1 lakh and the profit of manufacturer, 2 times you paid GST when the input is not available. So the beauty of the GST is that the input is available to you. And because of the input, you are charging the GST on the value addition, or you're charging the GST on the value addition. So come back to theory point. Here we agreed, no, GST is a value added tax system. What is the meaning of value added? Every subsequent stage, when the dealer, wholesaler is selling to next party, no, what is the value addition is doing? On that only GST is being charged. Hence GST is called as value added tax system. Second, the biggest benefit of GST is what? You get the credit of the input in each stage. This was not available in the earlier pre-GST era. The credit of input tax paid at each stage. The tax the retailer paid to manufacturer was available as input. And this was not available in the erstwhile tax law. That is before GST. Input was not available. Where when you're doing CST transaction, when you're paying excise duty, I'm in Coimbatore, I'm paying VAT. For VAT, I cannot adjust CST and excise. A person who is having service tax to be paid, he cannot adjust with CST and VAT because there was a conflict between central and state government. So input was not allowed in the transaction. Now, when GST is coming to picture, you do intrastate supply, whatever you do, for everything input is available. In old regime, CST was interstate, VAT was intrastate. Both people had conflict. Now what happened? Everything is come under GST. Whether you do inter, whether you do intra, for everything input is available. Everything input is available. And because of input being available, your cost price of the product is got reduced. And therefore the end price of the product is reduced. So we as a consumer are getting the benefit because of GST. Since GST came into picture, input was made available to the middleman. And since the middleman got the input available, they did not charge the tax as cost. Earlier, when the input was not available, the tax what they paid was added to the purchase value. So purchase value went up, selling price went up. Now when input is available, if you see here, when the input was available, what is the cost price of the retailer I took? I took only 120. Though he paid 1,34,400 to the manufacturer. But what was the cost price that I took here? 120. Why I didn't take 14,400 as cost price? Because this was separately recoverable from the customer. And hence, I didn't have to take this as cost price. No, don't tell, say if this is coming from customer, then customer is paying this money. No. Donkey fellow, if input was not available, the customer will pay 2 times GST. One 14,400, second will be this 18,288. Because 14,400 is included where? In this 150 to 400, in this cost price. And on top of that, he is getting 18,288. And one more thing I'll tell you, if input was not available, no, we were having cascading effect. What is cascading effect? Tax on tax is called as cascading effect. Think about it. I am talking a scenario where this 1,34,400 is your cost price. Retailer cost price is 134,400. In this 134,400, what is the breakup? 120 is the purchase value and 14,400 GST value. Input not available, so GST became your cost. In this 13,400, 14,400 is included? Included. Plus 18,000 margin. 150 to 400. In this 150 to 400, 14,400 is included? GST is included? Yes. Now, on this 150 to 400, only you multiplied 12%. No? Which means in this 150 to 400, we had 14,400. When you multiplied it, this 12% also got multiplied on the tax. So on tax you paid. When input was not available in pre-GST era, when CST was not given as input, on CST you calculated one more time tax. Tax on tax was there. In the old pre-GST era, there was tax on tax. So there was cascading effect. So because of GST, the cascading effect is removed. So when any GST, any taxes is not given as input, no, that tax becomes your cost. When this gets included in your cost price, on that only you charge again GST, tax. So that becomes tax on tax. GST helped us to remove the cascading effect, which means there is no tax on tax. So two benefit here. One, there is no tax on tax. And second, on this 1 lakh rupees, original 1 lakh rupees and original profit, double time taxation was avoided. That is the beauty of GST. Any problem here? I know this is difficult to understand. You might have to watch this portion as one more time recorded to get a better clarity. Nothing wrong in it. I'm telling you, wherever you are in foundation, intern, and final, there could be certain concepts which you'll understand only 50% in the one go. Which means remaining 50% you understand better when you do this as recording one more time. Aram se you will understand. Are you able to follow? Now, if you have any doubts, please ask me. Are you clear with the entry, purchase entry of the retailer? Sale entry. When does input come? When does output come? That part is clear. And how the set off is done, is that clear? In this, if you have any doubts, please ask me now. Any doubts? Any part you felt, sir, I didn't understand this point. Can you please explain? If that is, which part it is? In case if the retailer doesn't keep the margin, okay. But why do you think retail will not keep a margin? Why retail is running a trust? Okay, no problem. Now she's asking, sir, retailer is my friend. So he's giving me the goods on cost to cost basis. Now apply your common sense. Retailer ka cost price is 120. Profit margin 0. So selling price is 120. On 120, what is 12%? 14,400 is the output GST. Now you have input how much? 14,400. So GST is 0. So no GST you are paying because your friend is there. Your friend is not keeping margin. So no GST you're paying. So you're saving from the margin also, you're saving from the GST also. So whatever GST you pay to manufacturer, the same GST you'll recover from the customer. So if there's no margin, no GST. See, GST impact is 0. That's why we say GST is value added tax system. If there's any value addition, GST will come in the subsequent stage, or is it not come? It is my 100% challenge. You go to any nook and corner of Tamil Nadu, South India. This in-depth explanation nobody will give. Everybody will tell you, purchase this entry, sell this entry. That's all. It is my 100% challenge. I've checked it. Now, why I'm explaining this point is because you need to understand the impact of what is happening. Boss, you're into a CA professional course. If somebody asks you why this is happening, in that place, if you're not able to explain them what CA have studied, man. Correct? No. It is my 100% challenge to you. You ask any of your friends studying in any other academy. This entire meaning of this process, not one person will be able to tell. It's my 100% challenge. 100% challenge. On recording, I'm telling you. On recording, I'm telling you. It's my 100% challenge because I've asked people. Nobody will spend time on this. Rather than start working the answer question from IC model in the first class itself. But I've not done that. I've ensured that the concept is fed in your mind. To take advantage of this, understand the entire process. When I come back in next class, I will not sit and explain all this point one more time. We'll directly do the big questions. So at that point, you'll have a doubt. What is this output? What is this input? Why are we doing all this? That time you'll have doubt. To avoid that doubt and confusion only, I'm explaining so much in advance without you asking. Any problem here? Now, I told you I'll explain you what is GST value added tax system. Is this explained? First point is explained. Yes. Second point is explained. GST is a comprehensive indirect tax. What is meaning of indirect tax? It's a tax on income, but not directly. It is indirectly. Explain. And how the taxes are subsumed, that also explained. Yes. Destination based tax, I told you will understand only in the intermediate level. Now I can't explain. Next, prescribed rate is explained. Registered taxpayer is explained. What is the credit of input tax? The tax what the retailer paid Actually, he's not supposed to pay, but he paid because we don't know the end customer, no? So temporarily he paid with the intention to collect in future. Anything that I get in future is asset. So that asset ka name is what? Input tax. So that is called credit of input tax. So credit of input tax paid by the middleman in each stage would be available, which was not available in the erstwhile, means earlier tax regime. For CST, excise and certain things, the input was not available. Now everything input is available. And because of the input being available, what is the advantage to the end customer? The cost of the product, the final cost of the product reduces for the customer. And finally, the GST, who will bear? At the end, who's paying GST? You paid total how much to government here? In total, 16,560. The entire 16,560 came from whom? From where? End customer. Initially, retailer paid. Out of the 16,560, he paid temporarily. But later he recovered from you. So ultimately, the money which government earned from you, 16,560, who paid his entire money? The end customer. That's why we say that the end customer is the sufferer of the GST. Under GST, the final consumer shall bear the entire GST charged at the each stage of supply. Any problem? Now, one last part, then we'll wind up. Advantage of GST. With that, my theory part is over today. Elimination of the cascading effect. What is cascading effect? Tax on tax. If input is not available, that input have been your cost. On that cost, again you would have charged GST. So in that cost, GST is there. On that again GST. GST on GST is called as cascading effect. Tax on tax. So that got eliminated because of GST. This was there where? In the previous tax regime. Second, because of eliminating cascading effect, the cost of the goods and services got reduced. Reduced cost of goods and services due to elimination of the cascading effect. One, tax on tax is helping us to reduce the cost. Second, because of this input being available on the initial cost of 1 lakh, an initial profit margin of manufacturer, on that again tax is not coming. So because of both the reasons, my overall cost of the product has come down. Elimination of multiple taxation and double taxation. Multiple taxation in old regime, CST, VAT, excise. If I'm manufacturing this phone, excise duty. If I'm selling within the state, excise duty plus VAT. If I'm selling outside Coimbatore, that is outside Tamil Nadu, CST will come into picture. So multiple taxation is being avoided because of GST. Double taxation means what? Tax on tax. Double taxation means what? Excise duty I'm paying again for this CST. Excise duty I'm paying again VAT. Excise duty I'm paying again international taxation. What is it? Customs duty. So double taxation is avoided because of GST. Reduces procedural compliance. In old regime, if I was tire manufacturer, on manufacturing I have to pay excise duty. Selling in the state of Tamil Nadu, I have to pay VAT. Other than Tamil Nadu, CST. If I'm doing service tax, how many times I have to file the returns? 4 times. Procedural compliance was very complex. Now it reduced my compliances procedure. Where I was filing 4 to 5 returns monthly every month earlier, now I'm only filing 1 returns, which is GST return. Single point of litigation. Earlier, CST department officer will call me, VAT officer will call me, excise officer will call me, service tax officer will call me. So how many places I have to go into litigation? Litigation means what? The legal issues with the department is called as litigation. So now there's only one GST officer. So single point of litigation discussion. Reduce cost of compliance. Cost of compliance. Pay separate filing fees for excise. For filing excise returns, separate charge. For VAT return I file, separate charge. For service tax return, separate charge. For customs duty return, separate charge. So multiple charges the client was paying. Now he has to pay only one single fees called as GST filing fees. GST filing fees. So the cost of complying with the taxes got reduced. Not just that, the return filing procedure also being simplified. Earlier it was very complicated. Now it has become very simplified. This both you will understand when you do practical training in the article. Electronic matching of input tax credit. Now, input what you take, the data you upload in the GST return. In that itself, how much input is taken, how much output, everything is there in the software. Where? GST software given by the government itself. Forget you will have your own software. But imagine those small people who don't have the software. They have difficulty, no? So now all the data you submit to GST department. Now in the GST department portal of yours, in there how much input, how much output, everything is available. So it becomes easy for you to match your input and output. So electronic e-matching of input tax credit becomes very easy in the GST system. And you're able to pass on the input tax credit to the next people. So whatever tax the retailer paid, will go to the next person. Next person. The input tax has been carried forwarded. Now here only one middleman I kept. This is possible when there are multiple middlemen. That is a manufacturer selling goods to wholesaler, wholesaler to dealer, dealer to retailer. Then the input tax keeps on passing. So that advantage is there. Reduced GST rates. In olden days, now this point I would not 100% agree. Service tax earlier was 12, 13, 14% only. Now it is 18%. So some place government is screwed up. They've increased the rate. In some place, compared to olden rates, now it is much cheaper. Olden rates were high. Now in this, the rates are a little bit cheaper. So this is the advantage of having the GST. The idea behind GST was one nation, one tax. And this has paved way for so much of advantage to us. Am I loud and clear? So whatever point I've discussed is there, almost all the points are there in your theory. If you take your this point, everything is mentioned here. GST is a comprehensive indirect tax which has subsumed multiple indirect taxation such as VAT levied on the sale of goods, excise duty levied on the manufacturing, service tax on the provision of services. GST is single tax on supply of goods and service right from the manufacturer to consumer. Indirect tax is borne by the customer who ultimately consumes the product and services. So whatever is being given here, I've summarized the point and given in the PDF. So this PDF will get not now. Soft copy will be uploaded in your software. Hard copy, you might get it after 1 month or 2 months. So as and when I keep on doing the chapter, I'll upgrade the theory. Once a couple of chapters is done, let's say 5, 6 chapters is done, I'll give a printout of that, make a book and give it to you. So it becomes easy when you do the revision during the exams. So your homework is what, whatever the theory is there here, whatever the theory part is there, from here, page number 2.32, 2.33, 2.34, 2.35, 2.36 till 2.36, whatever theory is there, you'll take it as homework. Do what? Read it. If you have any doubts in it, immediately in the next class, you will get it clarified. Am I loud and clear? Any problem? Online people, any problem?
No, sir.
Is there any point that you're not clear so far? Maybe one more time, if you watch this recording, you'll get more clarity. But despite watching recorded class, if you still have any doubts anywhere, be absolutely free to discuss with me. I want each and every point, you have to digest it. You have to own it. Why this is happening, why this is happening, that emotion and feeling should be very clear for me. If I ask you any twisted question, you should be able to apply your mind. So because of this only, this is happening. To that level, I want your knowledge to be raised. Am I loud and clear? Loudly say yes or no. Yes, sir. Online people, am I loud and clear?
Yes, sir.
Fine.
Yes.
So next class, when I come back, we'll start with the practical questions. Practical questions can be a little bit challenging, but you have to bear with me. Easily, one by one, we'll deal with it. So we'll take maybe 1 or 2 more classes and we'll try to wind up with the GST. Any problem? Any problem? No, wonderful. Can we wind up? We'll come and tell you. He's asking us a set off is there or not. There's a very tricky. Time will tell you. Let it be in suspense. Okay, we'll wind up. Online people, can we wind up?
Yes, sir.
Okay,
Yes,
stay
sir.
back. Don't go anywhere. Online people stay back. Offline people stay back. 2 minutes have to discuss. Others, I'm okay with it. Let's wind up. That's all from my side for this session, people. I'll see you all in the next class, which is on Wednesday. Yes, Wednesday, 10 a.m. sharp. Until then, bye bye. See you. Take care.